Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, October 6th, 5:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida with The Big Show, the Friday edition of the Revere Market Insight video where we take a look back at the prior week, take a look ahead at what is important to know for next week, and review the world famous 21 over 21 leaders list. Let's get right into it. Right off the bat, surprisingly a change in the market state. Now, we talked about earlier in the week how the S&P 500 undercut its low of the prior rally attempt, which killed that rally from an S&P 500 index standpoint. But the NASDAQ 100, which we've been pointing out has been showing relative strength, did not undercut. And before the market opened, the non-farm payroll report came out, and it was not at all what the market wanted to see at first, as we had a big gap down, a lot more jobs added than were anticipated. But as is often happens with the market, and often this is how bottoms are put in, the expectation of the reaction to the news was reversed. So we had a gap down. We tested the 200-day moving average pre-market, and dripped lower for about 45, 50 minutes after we opened, with a gap down of a 0.5%. And then out of the blue, that's it. Selling dried up, and a strong positive reversal happened, rallying about 1.5% into noon. And then we maintained those gains and, in fact, added to them later on in the day. So the bottom line is market state changed to uptrend as our discipline dictates, 10-6 follow through day. Uh, this is a time tested, proven approach to participating in leading stocks when the market is in an uptrend. We'll still label it a weak uptrend. It needs to show us for a couple of reasons. Mostly, we'll get into it when we hit the tail of the tape in the charts, but um, we followed our discipline. We were already 60% allocated through the S&P 500. We added 2 stocks, starter positions, and a leveraged ETF. We'll talk about that when we get into the tail of the tape also. But the bottom line is, 8 hours ago, I was a lot more pessimistic than I am right now, but the market will do that if you pay attention to it. Is it just a short squeeze, oversold bounce? It's possible that it is, but we don't predict. We take a look at the price. The volume was there. Leadership participated. That's important. And we see what the market brings to us when next week unfolds. Here are the numbers. Big Seven, strong day for the Big Seven, and this factored into the leveraged ETF that we bought. Big Seven up 1.94%. RG8 is our 8 growth ETF composite. Nice day, up 1.4%. S&P 500 up 1.2. NASDAQ gap down 0.7, finished 2.5% above that, up 1.7%. Dow up 0.9, mid caps up 0.8, Russell 2000 small caps up 0.8, global diversified 60/40 up 0.62. Bond prices still weak, which meant this rally occurred in the face of higher interest rates, although they did finish quite a bit off of the highs, but they didn't turn red. I'm talking about yields. The dollar did start out strong and faded to red, so that was a benefit to stocks also. In-house GROTECTION up 0.69%. We'll hit the tail of the tape in the 2121 list. Let's get right into it. We'll start here with the S&P 500. I want to note that all 5 of the major indexes have now had a stochastic cross up from oversold. This initially happened earlier in the week, and that's when we got off the short side. We had some weakness after that, but the lows of Monday never broke on the S&P 500. They were tested 4 times. They're right above the 200-day moving average. If you look at a weekly chart, it's a 40-week moving average, and it was hit repeatedly this week, but held. Sometimes instead of weakening, it doesn't break. Call it the equivalent of, instead of forming a blister that burst, it forms a callus. And it did its job. It's a strong, normal spot to bounce from, with it being the 200-day moving average and also the breakout level from earlier in June. So we retraced that gain, We held there. It's no different than revisiting a pivot on an individual name. And we've got a lot of the various technicals pointed in our favor, notably the stochastic cross up, uh, a negative reversal in the dollar, oversold situation with yields, and a couple of others also. When we hit the tail of the tape, we'll touch on those. So there's the S&P 500. I'm going to take stochastics off of here so that we can see the picture a little bit better. I also want to bring in weekly charts in the upper right as we do on Friday, so we can see the weekly close, the weekly gains, and how these everything that we're going to discuss stacks up on the weekly chart. So there's the S&P 500. Next up, the leading index, the NASDAQ 100. There's another index leading even more than this, and I'll point that out when I discuss what we buy or what we bought, one of the things that we bought anyway. NASDAQ 100 reclaiming the 8, reclaiming the 21, coming into the downtrending 50-day moving average, big volume, everything there today to check the box for the follow-through day. Now to the indexes that still continue to lag. Big cap Dow, still below all of its moving averages, closed right on the 8 EMA. Note the relative weakness. Mid caps, MDY, bounced at that 140 level, didn't undercut the lows from earlier in the week, ran into the declining 8 and paused. Hey, it's a start. And small caps didn't undercut Tuesday's lows either. So that 170 level, big level, you can see going all the way back to last year. 170, a normal spot to bounce from, ran into the declining 80 MA. So the next step for these small cap indexes is to get above the 80 MA, mid and small, and challenge the 21. S&P 500 still below the 21-day moving average, but it is flattening out. The strong day did a lot to contribute to flattening out the slope of the line on the 21-day, and we'll see what next week brings. So those are the 5 major indexes. Let's go to the VIX. As you might expect, a big negative reversal on the VIX. It initially gapped up and then reversed, down on the day by 5.6%. The VIX on the week ended up down 0.4%, broke back below the 200-day moving average. It's now coming into uptrending moving averages that it needs to break back through. We ideally want this to get back below 15, which is where the market has done its best work this year. That also gets the equivalent average true range looking forward to the S&P. Anything below 16 gets the average true range back into the under 1% level, under 1% on a daily basis, average true range on the S&P. Let's go to the dollar. From the VIX, the dollar, look on the 5-minute chart, you can see it gapped up with the indexes gapping down, quickly sold off with the indexes showing strength, and then flagged into the day, broke back below the 80 EMA. Next up is a test of the 21 EMA on the dollar. Gold, and silver stocks were strong early despite the dollar being up. It's like they forecasted that it was going to reverse, and it did. Good day for these. Not as good as the market, maybe just all sold out. Look at those big red bars over the last 2 weeks, but up 0.5% on GLD, GDX up 2.2%, silver up 2.5%, Bitcoin up 2%. Let's flip the bonds now. Broad bond index, well off the lows. Look at a 5-minute chart here. Initially, prices gapped way down, rallied, didn't get to positive, as I said, but positive reversal is a good sign for stocks. It did undercut the low from earlier in the week and get back above it. And undercut and reclaim very often puts in a bottom. So this is something we'll be watching also. But the bottom line, bonds closed near their highs, closer to their highs of the day than their lows. Off of their lows, still negative, which means rates still went slightly higher. Bond market is closed on Monday for Columbus Day, so that's going to be interesting that the stock market won't be dealing with any changes to what's going on with the bond market. TLT closed mid-range, undercut, down 1.2% on the day. The 30-year TYX, you can see it ticked above 5%, but reversed, still up on the day, up 1.13%. But again, the reversal, uh, maybe a harbinger of lower rates coming. We'll have to see what comes out. This has been very confounding to the markets. The 10-year up 1.42%. Okay, those are the inner asset correlations that we look at. Let's get to the tail of the tape. So we got the week uptrend. All the stochastics on the 5 major indexes are oversold but turned higher. Same thing with the RG8. NASI RSI updates at 6 Eastern time. Let's see if we can get that updated now as I go off the screen. It's not updated. Yes, it is updated. Nope, it flattened out but did not hook up. Actually, the price hooked up. It looks like we're flat on the RSI, so that's a step in the right direction. Another positive day will give us the hookup on the RSI. So we got a mixed bag here, whether or not we're in the bull or the bear case. Haven't reclaimed the 21, but did initiate the rally with the follow through day. There are the NFP numbers. It was a big miss, and that's what prompted the initial pre-market gap down of over 1%. Market down, yields up, dollar up, but a reversal to the upside and the follow-through day on the NASDAQ 100. It was day 3 on the S&P 500. ADMA, first day back above on the S&P, 16th day below the 21. That's what we'll be looking to fix next week, or we'll be looking for improvement in the market relative to that. 10 of 11 sectors were up, led by tech. The only down sector was staples. So it's kind of funny. Bank of America and the Walmart CEO both came out saying that they're selling the sales in weight loss drugs is so high that they're expecting less food to be purchased, and that's what has been hitting XLP this week. Kind of amazing, but that they, like I said, staples have not been cheap on a peg uh, basis. That's price earnings to their growth rate. So what do we do in house? FNGU. Let's take a look at this. FNGS is 10. They're called the FANG stocks, and then there's it's the big 7 plus Snow, Netflix, and AMD. And this has been outperforming the NASDAQ 100. It's weighted differently. This is weighted 10% to each of the 10 since 818, the bottom. Here is how they've done. You can see FNGS up 4.2% versus 1.83 for the NASDAQ 100, 2.6% for QLD, but FNGU, which is what we bought, up 9.57%. So it's 10% of each of those 10 stocks. And it really flies if they get a tailwind. So we took a 1% position in that, and then we bought 1.5% size starters in Zscaler and CrowdStrike. Very clear that software security cybersecurity has been a leading group that's held up very well. These are the two leaders in there. Had reasons to pick both of them. So instead, we split the difference and bought half of each. And you can see the relative strength and especially strong volume on CrowdStrike. Okay, what's next? So that took our adjusted beta up from 0.6 to 0.72 in the bottom line for the week. NFP payrolls jobs report gap down, strong gap down, but then a strong, broad, positive reversal to the upside. Follow through day for the NASDAQ, led by Big 7 and leadership stocks. This is what we look for as a start. No, not saying it's going to continue. We had a follow through day on 829 that failed. We had an attempted rally off the bottom on 926 that failed, except on the NASDAQ 100. So today, follow through day. And this reminds me of last October in the S&P 500 when we were selling off to the downside, and this is what put in the bottom for COVID. On 10/13, we got a terrible CPI report. The market initially gapped down early morning, shortly after. It immediately reversed higher, and that was it. It put in the bottom. The market is fascinating from this standpoint. When you least expect it, and that's what kicked off the rally and put in the bottom. So similar situation where a negative news event that should have caused the markets to go down did not. They went higher, and we'll see how this plays out. Now I got to quickly fly through the 21 over 21. And first, I'll talk about four stocks that absolutely got punted off this week. SAM, hard break below. CF, uh, not a harsh break, but trending lower. Sienna, which looked really good for a while, uh, after its earnings gap up, just completely came apart. That one's gone. And Ollie, if people are buying less food, I guess I don't know, does Ollie sell food? I know Dollar General does. Costco was down on this news. Walmart was down on this news. They had positive reversals, but still big unexplained sell-offs. Look at here's Walmart too, bounced at the 200-day moving average, but we're initially down big early on that news that weight loss drugs may be impacting food sales. All right, so what did we add? We added this, and then FNGS. This is the one time, so always use the underlying when you're looking at a leverage ETF. So FNGS goes on the list, but we're playing it with FNGU. It's stronger, and I like the weightings, the equal weightings, better than the heavy weighting on Microsoft and Apple and Amazon, which have been lagging relative to the other big names. CrowdStrike, we bought. VRT added back. Haven't purchased it, but it's definitely at the top of the list. And Zscaler we bought, leftovers from last week. DUOL, Molina Healthcare, undercut but reclaimed. FedEx, this is going to come off the list. There'll be a lot of work done to this list over the weekend. For now, we're just reviewing four. I know for sure we're cutting, and some others maybe for weakness. Fabrinet, not weak there. Negative reversal, though, just got too extended. CEG looked like it was going to get cut. Big positive reversal to the upside. Mobileye looks great. Is in our top five. BRBR, nice tight action. Akamai, undercut but reclaimed the 21 by the end of the day. Dell is fading, close below the 21. ESTC, strong day, undercut yesterday, reclaimed today. Nutanix also looks great, near the top of its range. CCJ, tough early week, coming back, but didn't make it back above the 21. CEIX regained the 100 level. TBT, still strong. And TXT, undercut and reclaim, closing right on 21. That's going to wrap it. I can't keep these videos long. We're still at threat of audio issues if I do, but we're converting to Zoom over the weekend, and that should solve that problem. So uh, as always, love to hear from you. The email's don@revereasset.com, or my partner Dan Stewart, dan@revereasset.com. Had a bunch of clients come on board this week. People seeing that you don't need to be at the mercy of the market. You can, if you have solid rules, protect your downside and still participate on the upside, and do it without high fee annuities. Uh, phone is 855 Real Wealth. That's 855-732-5932. Of course, it's not how much you make in the market, it's how much of that you can keep. Are we back into how much you can keep mode, or are we back into make mode? The market will decide that for us, but we've got a set of rules to follow regardless of what unfurls. So this will wrap up the surprising rally edition of the Big Show. It's Don Vandenbord with Revere Asset, telling it like it is, wrapping it up for the week ending 10/6. Thanks for listening, and have a great weekend.